Okay, we're recording this video on Saturday, the 20th of April, 2024. Just gone 10:26 p.m. Chicago time. Do hope you are doing well. So it's the weekend, and it's time for another weekend futures market recap. We'll go through 15 of the largest futures markets, and I'll show you what I'm seeing on my charts. Let us talk about the Emini, the Dow, the NASDAQ in a little bit more detail, and I'll rip through the futures charts fairly quickly, just looking at the broad trends. So this is the third week now of a down move, and everybody's getting a little bit over it. I'm over it. I thought we would, I'm not sure. I don't know. I didn't think it would go this long. I thought it was going to be like a week and a half, 2 weeks, but we're 3 weeks into this. But there is some light at the end of the tunnel, and I'll show you that on a couple of charts. So first of all, this is the Emini at es.d. This is the day session only, so it does not include the crazy move that we had on Thursday night, which was the Israeli strike on Iran, and that caused a massive sell-off overnight. We'll see that in the tip bar chart, but you don't see it in this chart. So we're down at 5,000, and finally we're getting close to an exhaustion type read. So we've got on better momentum a negative 5.8 million read, which is good. We're getting close to the levels that we had down here. We're getting close to the levels that signaled up here. I was talking about momentum exhaustion patterns running from one side of the boat to the other side of the boat. We've run up this far, we're running the other way, and so we're getting to an extreme reading here. So that is good. But in terms of volume patterns on this chart, there's no amateur down bars, there's no blue professional down bars. So on the Emini, there's nothing going on there. We've just got a momentum read. In terms of cycles, also not so great. The background's in red. We know we're in an uptrend. I've been saying this continuously for a long time. But a couple of things have happened. So first of all, the highest time frame has gone off with an end of trend resistance up here. So that makes that level extremely important. We are going to need to come back and put in pullback to end of trend on the intermediate time frame. We busted past the pullback level, which means we're going to be caught by the next highest time frame. So that's support coming in on this chart when these two lines come together. So the slightly thicker lines need to come down here. So the initial support has been bust, therefore we need to catch at that next level, and that'll be a pullback in an uptrend on the intermediate time frame. Now it looks like at the moment that these are pretty parallel, which means we're in trend mode. They can switch quickly, they can all of a sudden start to dive down, but it does mean we're certainly 2 or 3 days away from something like that happening. So timing wise, there's a ways to go before that support's come in. We've had some good trending moves, some good ranging days. I don't know if that's going to continue or slow down, whatever, but yeah, timing wise, that's what I'm looking for to catch this move, because this one didn't work and it'll take some time to play out. So we have to wait and see on that one. Now that was the Emini chart. There's better news on the NASDAQ and the Dow charts here. So here, again, same thing. This is the futures on the NASDAQ daily chart, and we've got a negative 2.2 million read down here, which is pretty good. It's getting close to the extreme that we had back on this dip, but I think the high up here was closer to like a 3.3 read at the top up here. So we're getting there in terms of exhaustion patterns, but look at this. We've got a blue professional down bar. That is good. So that means the professionals are starting to come in on this dip. We've trailed the stop on Better Pro-Am up a little bit, and that's really important. So trailing that stop is good. So we could crash through it and keep going, definitely, but that we put in that and that trails the stop up pretty close on that, that's good news. In terms of timing here, yep, you can see we're starting to dip down on the intermediate time frame. So we bust past the support on the lowest time frame up here. We're going to be caught by the highest time frame, and these lines are coming, at least they're dipping down a little bit, and they'll come across. And typically what happens is that happens above the resistance of the intermediate time frame here. So what we've done is we're putting in another pullback to end of trend, actually, just like this one on this intermediate time frame. So in terms of targets where that might happen, it's going to happen between where we are today and this 16665 level. Should happen there for that to be a clean pullback support level that comes in. I don't think we're going to crash down through there, but who knows? If it does do that, that's worrisome. But I would have thought we're going to catch between here. That would be typical, and that'll put us in a pullback and an uptrend signal there. So that's good news on the NASDAQ. On the Dow, we also had some good news, and this one I'm looking at DIA, which is the ETF for the Dow. And the Dow, you'll note, on Friday was a lot stronger than anything else. And this is what we've got going on, is some rotation. So we've got some rotation. The stocks that have been battered hardest are the ones that had the best run-ups in the last 6 months or so. So a lot of the tech names and so on, they're finding it difficult. Now, Apple, I should probably pull this up and just show you that. Do it on a new template? Yeah. Show you quickly Apple here. So this is the new setup of the indicators, but look, this is the trouble that Apple was having up at 200 up here, and you can see this is a classic end of trends rippling through the time frames. So first of all, we're putting in a pullback to end of trend here on the highest time frame, because we bust out of this resistance here, we put in a pullback, and it's run end of trend on the highest time frame there. On the lowest time frame, we also busted into a uptrend above this level at 155 or so up here, and that put in a pullback to end of trend. And then that level was also resistance on the intermediate time frame. We need to put in pullback to end of trend on the intermediate time frame. So everything came together up here, just up under 200, end of trends on all three time frames. At the same time, we had exhaustion buy going on here with a bearish divergence right on the zero line, so we wait for the flush pattern there, and at those highs a Rambo, showing that the amateurs were leading the way. The low of that amateur sequence gets broken, not like these ones. Amateurs, yes, leading the way, but the lows of those amateur sequence never got broken. Bang. We get up to those highs. I always talk about exhaustion buy and Rambo patterns. That's unstable, and we topped out just under 200. So classic there. What I'm showing you is there's weakness in those tech names, but instead what's happening is the money's running into the Dow. So the 30 stocks that are a little bit more stayed, higher dividend, different sectors, and international money coming into the Dow, picking it up. So the Dow actually had a good day on Friday, whereas the NASDAQ and the S&P didn't. Closed up, I think, on the Friday. And here on the Dow, we've got 4 blue bars come in to catch us there. In terms of exhaustion sell down here, yep, minus 15,000.4. And the read up there, that read was 17,778. So pretty high levels. We're coming down to the same types of levels, but the blue professional bars are starting to come in. Here, can we see us being caught? At the moment, what have we got? We've got a support on the lowest time frame that we just bust through. It's just underneath that little level there. You can just see it there. Bang, bang, bang. Is it going to be caught by the next highest time frame? Well, on this chart, you can see those slightly thicker lines there that are almost superimposed on the highest time frame here. They're starting to come together, come down, and cross. So that is good. So although the S&P, the E-mini is not as showing those signs of strength, all of a sudden on the NASDAQ and the Dow we can start to see some signs that this move on the downside could be coming to a close. So there we go. Good news. Now, let's roll through the time frames. 135-minute chart, exactly 3 135-minute bars in a day session of the E-mini, and you can see all these blue professional bars coming in. Had a question from Larry this week on what was the significance of these blue professional bars coming in here. Was that professionals buying or selling? What I typically look at is what's the action after the blue professional bars come in. Certainly, the blue professional bars coming up here, taking profits, that's them getting out. Here, they're getting out. This series here, getting out on a strong day. They moved the market up, and then they're starting to panic out a little bit, so they're getting out here. But when we come down to the bottom of the range, these blue professional bars are accumulation bars, so they're starting to dip their toes back in the market, 5,100, 5,000, and so on. So they start coming back in. You can see the exhaustion patterns that we've got here. This is pointing upwards. This is showing that there's net, well, it's not net buying, but it's less selling, at least, coming down into these lows. Net buying would be above the zero line, but it's below the zero line, so less selling happening here. So the professionals just got resting buy orders, waiting for the market to come to them. They're never chasing anything. They're just sitting there looking at things that are good value, and they pick them up on the way down with their resting buys. But on 135-minute chart, you can see here, we busted through support on the low and the intermediate time frame, which means we're going to have to put in a pullback to end of trend, at least on the intermediate time frame here. When these thicker lines come together, that's the intermediate time frame that we were talking about on the daily chart. So these lines are going to come down. We've got to put in pullback to end of trend. I could see us having a little bit of a bounce kind of early next week and then putting in a pullback to end of trend, but we're not all done on the downside until we put in that pullback to end of trend on the 135-minute chart there. So that's really important. 45-minute chart here. There we go. The background's in grey, confirmed downtrend in terms of price and volume. We busted through the trailing stop on Better Pro-Am, kept us on the right side of the market here through all this junk that went up on those highs, and then flipped us around here, bang, bang, bang. Now, on the 45-minute chart, we have not had exhaustion sell down here. No blue professional bars, the trailing stop's miles away. We're below supports on all three time frames, low, intermediate, and high here, and we've got to go put in pullback to end of trends on those time frames. So we've got to do that this week. 15-minute chart, same thing. This is the 3 weeks of weakness that we've had. The solid yellow lines mark the beginning and the ends of the week. Topped out there about 2.5 weeks ago. We've been in a downtrend ever since. Now on this chart, again, the trailing stop's miles away because there's no blue professional down bars come in. The last sequence was here. The last exhaustion pattern we had was on the way up. Those were a whole bunch of trailing stops were bust with that move there, and so we've not seen an exhaustion sell on the downside. This was exhaustion sell getting the move going. We need a similar type read here, so it's going to be painful when it happens, but we've got to see that on the 15-minute chart. In terms of the cycles here, we're below the support on the highest time frame, so we've got to put in pullback to end of trend. On the highest time frame here, we've got one little pullback to end of trend. There's that momentum signal sitting in there. No blue professional bars at the lows, so it could be volatile to put in a pullback to end of trend sequence there. But we've got to go see a pretty hefty reading, I'd have thought, and some blue professional bars coming in on the lows. That's what I'm waiting for on the 15-minute chart. Lastly, tip bar chart, and here's the activity that we saw on the Thursday night into Friday, which was the scare that we had World War III breaking out, missiles going the other way from Israel to Iran, and it caused a whole bunch of markets to collapse. Now, down here, Rambo pattern, classic, we actually saw this on a whole bunch of the Forex charts. They were particularly helpful. We had a great little reversal signal on the euro down there, but all of these overnight had signals like this where the amateurs were being panicked out, and as soon as the news turned around within 2 or 3 hours, that wasn't as bad as it looked at first. We got that bounce, and it was a heck of a bounce all the way back up. I find this really important because it's now marked somewhere on the chart where there's an extreme level, and so we have a visual marker of where the market might go. Confirmed downtrend, the background's in grey. We've been trading down on this 13,500 tip bar chart. All of the patterns that we've had have been on the upside, exhaustion buy, trailing stops being busted out here. Here, that's close to the zero line, so we wait for the flush pattern. The flush pattern comes in with blue professional bars here. Let's wait and see if it cracks above 5,010 Sunday into Monday to switch that around. But what I think we might see is an exhaustion type read, so a 20,000 type read around this level down here. And because we've got that on the chart there, it's like a magnet. It just draws the market to it, to test it, to bounce off it or whatever. So it's there and is, 30 points away from where we are at the moment. And on the way down here, yep, we tried to hold with a whole bunch of levels come together here, pull back to end of trend, support on the intermediates more than the highest. Did not work there. We didn't bust up through the trailing stop on Better Pro-Am here. Only one little blue professional bar came in and we sold off from there. So now, as we're coming down through these lows, these support levels, they're not holding. The bars are in white. We're in a downtrend. We've not put in any pullback to end of trends. So I think we're going to have to see that on the 13,500 tip bar chart. But whether it's going to be a little reaction through 5,000 here, and then we come down and look for this level, hunt that level out with an exhaustion pattern and end of trends, I don't know. But because we've not put in any pullback to end of trends here, and it's still weak and it's playing with that support, it's probably likely it's going to fail. So there we go, some thoughts on the E-mini and what we might see next week. Let us just rip through the futures charts, and I'll try and do these really quickly. And I'm going to do it in terms of the easiest way of looking at a whole bunch of charts quickly is just to look at the background, the trending systems on the two different time frames, the low time frame and the higher time frame here. So on the euro we use as a low time frame a 500 tip bar chart just to get our entries, and then for trending direction the 1500 tip bar chart is the most useful. But this is the activity on Thursday night and the sell-off that we had, and there we go. Bullish divergence with Rambo patterns right there at the lows. Great little signal, bang, to bounce from there back up to those highs. But the euro's looking weak. We're in a downtrend. Last signals were in a downtrend here. We've just come back to blue professional bars here and here. and so likely a resumption of that downtrend until we test these lows again. British pound, same thing, backgrounds in grey here. One good thing, some blue professional bars coming in at the lows with exhaustion sell and bullish divergence, so that's some good news down there. But the background's in grey at the moment, so we're still in a downtrend on the British pound there. The British pound is a lot weaker than the euro chart there, and the Aussie dollar is the strongest of the lot. Here we've got a whole bunch of blue professional bars starting to come in at those highs, but they weren't down at the lows. So that's weakness, but we're now busted below the trailing stop here, and let's see if this 64 and a bit level holds. If that doesn't hold, we haven't seen blue professional bars at the low, they've been on the retrace there, so if that goes, we're back into a downtrend, cyclical resistance on the Aussie dollar. Japanese yen down here, so we had the reverse of the move in the euro, British pound, Aussie dollar. Here's the Rambo patterns happen on the reverse up here, so with sell-offs like that, people have margin calls, whatever. This is the yen carry trade gets reversed and money floods into the Japanese yen. So I'd suggest that that's a fake move here. We've got blue professional bars coming down here at the lows, but we've still got to make this resistance pull back to end of trend on the highest time frame down here. So we're playing at these levels. This could easily just flip into a downtrend, and actually has on the last bar there at the Japanese yen. What are we looking at next? 10-year notes. So they did quite nicely with a rally in the 10-year notes, but ended up with Rambo patterns again on that Thursday night. We've come down. We're in a downtrend on the lowest time frame here, 107. If that doesn't hold, we'll fall down into a downtrend on the 10-year, and we're playing underneath resistance on the highest time frame here, so that's got to play itself out. Gold's done quite nicely, and here everybody rushed into gold. Rambo patterns at the high with exhaustion buy. That's unstable. We've come back down, but we're still in an uptrend, so backgrounds in red on the low and intermediate time frame, so that's interesting. Silver, same thing, backgrounds in red on both of these time frames here. We've not had blue professional bars taking profits at the highs up here. The last time that we had big pros come in, we're at the lows down here at 28 on silver, so that's interesting. Bitcoin doing quite well this weekend, so we got the background in red happening here on both the low and the high charts here. No blue professional bars taking profits yet, and yeah, we're busting through these resistances. Here you can see all the bars turning red, which is good. So Bitcoin's in an uptrend, just sitting under 66,000 at the moment. Crude, now this is the move in crude, so crude spiked, exhaustion buy, bearish divergence on the lowest time frame, exhaustion buy here, and then it's all turned around, and we got blue professional bars happen on the retrace. This is a stair-step trade. We move down, we bust through the trailing stop, no blue professional bars at the lows. We come back up. The next time we trail down the stop, we stair-step it down. Blue professional bars come in here with bearish divergence, and so we're in a downtrend on the lowest time frame. We're in the dark on the intermediate time frame, but this could easily just turn around and head down on crude. So crude's looking weak. Natural gas, though, is looking strong. Backgrounds in red on both the intermediate and the low charts there. Copper is just on a tear, and who knows where it's going to end. We've got Rambo patterns at the moment at the highs on the highest time frame here, but no blue professional bars, and the backgrounds in red on both charts, and copper is really interesting, and I should reference some good thought-provoking videos that I was looking this week talking about the commodity sector and in particular copper. Corn, ags, so here we go, backgrounds in red on the lowest time frame, but it is in the dark here on the highest time frame. Exhaustion buy happening here. We could be rolling over here, so this could roll over at 432, 431, something like that. It starts to break under the lip type trade here, bang on corn. Soybeans, backgrounds in red here. That's nice with big pro bars happening here at the lows with exhaustion sell, and we are above trailing stop on better pro-am here, but we have got to play out this pullback to end of trend. These bars have to turn red before that turns into a confirmed uptrend on soybeans, but soybeans is looking okay, and wheat's in an uptrend. So that was the spike that we had. All of the ags spiked, as well as the spike in gold and crude and so on. It was really fascinating what happened on Thursday, but we've come back and we're making another go at this high here. Backgrounds in red on the low and the highest time frame here, so continued strength in wheat possibly this week. So there we go. That's all the charts I have to show you, and good luck with your trading this week. It's going to be a fun ride, I am sure.